fellow traders? It's Nick Trades here. And today I wanted to bring you guys a very simple indicator video about one of my key indicators that I've used in my trading over the last 3-4 years to help me identify trends and where price may be heading next, and show you how you can use it as well and incorporate it into your trading. Now, obviously, by the title of this video, we're going to be speaking about the exponential moving average. And if you don't already know, I'm referring to these yellow, green lines, whatever color you want them to be, lines on a chart that basically track price, the average price of any given asset over a period of time. So, for example, as you can see here, I currently have my 21-week moving average here in green, my 50-day here in yellow, and I usually like to add a 200-week moving average as well. So here, if you don't already know how to add it onto your chart, I'll give you a quick show. You're going to want to go to your indicators tab, search up EMA on whatever platform you're using, and for this case, I'll make it purple, and I'll put 200 as the length, which is 200 weeks in this case, and it will create a line here. Once I apply that, as you can see here, this beautiful purple line is the 200-week moving average. And you can see his price has came down and is currently trading below its 50-day and 21-day moving average, aka in showing a bearish trend. But there's a couple further things I want you to notice on and with the moving averages. Notice that when price is trending higher, notice that we are above the 21-day and we're using it as a bounce or support spot. So we break over the 21-day moving average here. You see it retraces and bounces, and further solidifying the strength of that trend. Here's another example, and I'm going to show you a different stock here. In this case, we're going to be looking at the daily chart of Devon Energy, actually the weekly chart. So here you can see back in 2019, price is heading lower and is trading below all its key moving averages, trading below its 200, trading below its 50, trading below its 21-day. And here, as I marked out, you can notice when these moving averages start to cross. And a bullish cross, in this case, would be that 21-day EMA breaking above that 50 and crossing. Now, this is not always a 100% a buy signal, because in stocks things are never certain, and this is just, to be taken with a grain of salt, because there's much more that goes into trading. It's not just moving averages and stuff like that. Psychology goes into it, but that's a whole nother video. But anyways, back to the topic here. You can see that we've crossed over and trend has flipped bullish. Here you can see what is our first point of resistance. That 200-week moving average was, once again, resistance, but we still are trading above that 21-week. So boom, we're here above the 21-week. We use that as a bounce spot. We finally break over that 200, and where do we find ourselves again? On a retracement back on the 21-week, further solidifying a bullish uptrend, and with a series of higher highs and higher lows, as you can see, all the way up until now, where the stock has finally retraced back. And who knows, we might actually come down and test that 50 very soon. But here I want to show you one more example, and this is on the daily chart of Netflix. Netflix, one of the strongest uptrends in the market for a long time, was kind of basing out here for almost, let's see here, almost a whole year. And actually, yes, over a whole year. And here I want to show you when you can finally see a change in that uptrend. So here I have a bearish cross. As you can see, the 21 EMA crosses below that 50 EMA. So once you see that price break, you can see we have a strong move to the downside. And now that 21 EMA that we use as support all the way up has now turned into major resistance. Boom, here's that another point of resistance here. You can see price is just downtrending all the way down, I should say, to the 350s level. And once we finally do have that upside break, we kind of come and test that 21-week moving average and break down from it again. So you see, price doesn't always come exactly to the dollar to the dot on these moving averages. That's why it should be taken as a grain of salt in your trading. Do not forget that these moving averages are just a simple tool to the trader and is not everything that goes into whether a stock will be moving higher or lower that day. You have many things to factor in: fundamentals, the overall general health of the market you're in at any given time. So just use this as an indicator to help you have a visual reference point on where price might see a reaction, whether it be to the upside or the downside. If you guys like this video and you guys want more indicator videos, I have tons and tons of indicators I can talk about. I can make a whole video about the relative strength index, TTM squeeze, anchored VWAPs, all of that. And if you did enjoy this content, I would really appreciate if you guys drop a like, a subscribe, and good luck on your trading, everybody. Thanks again. Nicky Nick out.